Yashvi Jain with my co-members of YEF, that is Youth Empowerment Foundation. Today, we all will be knowledgeable with fintech, blockchaining, as well as smart contract. Firstly, we'll talk about YEF, that is Youth Empowerment Foundation. It aims to accomplish the mission by spreading education in every village or slum of India through a team of youths who are working hard to build and accomplish our dream of an educated India. Basically, it is for upliftment of underprivileged. Now, take a glance at all the topics which we will cover. That is fintech. Under that, definition of fintech and its technologies. Then next one is introduction to blockchain. That is highlight of what is blockchain and its recent growth along with a brief overview on open source. Then next one is evolution of distributed system. In that, overview of the problem in current system and how a distributed system can help in resolving some of those. Then next one is smart contracts. What is smart contracts and how it works? Benefits of smart contracts. Then next one is challenges and adoption. Challenges and solution in fintech and challenges in blockchain. And the last one is way forward. The next step to take for building capability and technological expertise in a new and emerging domain. Now comes to fintech. As name says, financial technologies, abbreviated as fintech, is the technology and innovation that aims to compete with traditional financial methods in the delivery of financial services. Emerging technology for improvement, the use of smartphone for mobile banking, investing, borrowing services, and cryptocurrency are examples of technologies aiming to make financial services more accessible to the general public. Financial technology companies consist of both startups and established financial institutions and technology companies trying to replace or enhance the usage of financial services provided by existing financial companies. Now let's move forward to the definition of fintech. Fintech is a new financial industry that applies technology to improve financial activities. Fintech is the new applications, processes, products, or business models in the financial services industry, composed of one or more complementary financial services and provide as an end-to-end process via the internet. Fintech can also be considered as any innovative ideas that improve financial service processes by prospering technology solutions according to different business situations, while the ideas could also lead to new business models or even new businesses. Now let's be familiar with the technology of fintech. Within the financial services industry, some of the used technologies includes first AI, artificial intelligence, big data. Third one is RPA, that is robotic process automation. And the last one is blockchain. Now, let's understand in detail. The first one is artificial intelligence, AI. Artificial intelligence is a blanket term for many different technologies. In terms of the fintech industry, AI is used in various forms. Artificial intelligence algorithms can be used to predict changes in the stock market and give insight into the economy. AI is used to provide insight of customer spending habits and allows financial institutions to better understand their clients. Chatbots are another AI-driven tool that banks are starting to use help with customer service. The second one is big data. Big data is another fintech technology that financial institutions utilize. In the finance sector, big data can be used to predict client investments and market changes and create new strategies and portfolios. Big data can be used companies to analyze customer spending habits and therefore improve fraud detection. Big data helps banks create segmented marketing strategies and can be used to optimize the operations of a company. And the third point is RPA, that is robotic process automation. RPA is an artificial intelligence technology that focuses on automating specific repetitive tasks. In terms of fintech, RPA is used to perform manual tasks that often are repetitive and completed daily. These tasks involve the input of information into a system and do not require much skill. Thus, companies are replacing them with RPA, which can complete the task quicker and more efficiently with effectiveness. RPA helps to process financial information such as accounts payable and receivable more efficiently than the manual process and said often more accurately. RPA can be used to increase the productivity of the financial company. Last but not the least, blockchain. Please change the slide. Blockchain is another financial technology that is beginning to be used in the industry. Out of all fintech technologies, blockchain was developed for the purposes of finance and thus has direct ties to financial institutions. The main feature of blockchain in financial services is decentralization, where do not need a third party to execute transactions. Though blockchain is still an emerging technology, many companies recognize the impact that it will have and are investing accordingly. Please see the slide. Yeah, let's understand more properly with the help of the video. Oh. I think there is some technical glitch. Let's have a small quiz on fintech. Your first question given below. Which year mobile banking started in India? Please answer in the chat box. I'm getting the answers from Akshat Srivastava and two more students. And the correct answer is, please move the slide. A, 2002. I think you all have given the right answer. So we move towards the next question, that is, what all are digital wallets in India? Your options are given below. And the correct answer is D, both B and C. So I think all of you have given the right answer. The third question is, which fintech bank collaboration did not happen? I think no one knows this answer. Okay, I got one answer. Yes, and the correct answer is D, HDFC Bank. Now let's move forward to the next question. That is, which bank introduced internet banking in India? Your options are given below. And the answer is option D, which is HDFC. I think most of all has different answer. And the last question is, which one is not a digital payment firm? Okay, I'm getting the answers. Okay, so your correct answer is option B. Please change the slide. That is ZPay. I think this quiz will be more fun of you. So yeah, over to you, Ajay.
Yeah, can you switch to next slide, please? Yes. So now we are going to talk about blockchain. So what is blockchain? A blockchain is a type of database, and a database is a collection of information that is stored electronically on a computer system. Information or data in databases is typically structured in table format to allow for easier searching and filtering for specific information. Blockchain is simply a data structure where each block is linked to another block in a time-stamped chronological order. It is an immutable public record of transactions on a digital ledger, which is distributed in nature. Every new transaction is validated by the participants before they are added to the chain. All data on the ledger is verifiable and auditable, but not editable. Each block has its own unique cryptographic hash. Can you please switch to the next slide? So now we will look at the types of blockchain. First one, public blockchain, and it has, for example, Bitcoin, Ethereum, Litecoin, etc. The second one is federated or consortium of blockchain, R3, B3I, EWF, and the third one is private blockchain, which is company internal. So there are two types. One is peer-to-peer and the second one is public. So what's the difference between public and private blockchain? The public blockchain in that anyone can freely write data without permission granted by an authority, whereas in private only known and trusted participants can freely write data. There is no point of control. There's no point of control in public blockchain, whereas there is no point of control except initial control in private blockchain. Anonymity and no anonymity. For example, Bitcoin, Ethereum for public blockchain, and a group of partnering like archives in private blockchain. Okay, now we will talk about the evolution of blockchain. The first application of blockchain is money. For the first time, it is possible for two parties to transfer money directly to each other, secure, worldwide, and without any third-party information. The blockchain transfers ownership and records the transaction. And this blockchain generation
अरे यार
facilitates
मैंने वो तो निकाला
crowd ownership,
ये भी
shared, shared property on a small scale with control for the owners via voting and distribution of profits via dividends. This fits perfectly with the current trends of crowdfunding and the sharing economy. In addition to money and assets, agreements can also be registered on the blockchain. Such a digital contract enforces the participants to keep their promise. The capabilities of blockchain contracts are unprecedented. So what is the use of blockchain in fintech? There are 8 major use cases of blockchain in the fintech sector. It significantly reduces risk and prevents fraud. For example, Everledger, IBM blockchain, Oxus, VChain, and so on. Digital identification like KYC, AML, and CDD. Smart contracts for automatic contract enforcement, Ethereum, Neo, Archain, Address, and so on. Simplifying cross-border payments using faster clearing and settlements like RippleNet, MasterCard, Clear, Stellar, IBM, and so on. Can you switch to the next slide, please? So is blockchain secure? Blockchain technology accounts for the issues of security and trust in several ways. First, new blocks are always stored linearly and chronologically. That is, they're always added to the end of the blockchain. After a block has been added to the end of the blockchain, it is very difficult to go back and alter the contents of the block unless the majority reached a consensus to do so. That's because each blockchain contains its own hash along with the hash of the block before it, as well as the previously mentioned timestamp. Hash codes are created by a math function that turns digital information into a string of numbers and letters. If that information is edited in any way, the hash code changes as well. Succeeding with the hack would require that the hackers simultaneously control and alter 51% of the copies of the blockchain so that the new copy becomes the majority copy and thus the agreed upon chain. So what are the pros and cons of using blockchain? So first we'll look at the pros. The improve accuracy by removing human involvement in verification, cost reduction by eliminating third-party verification, decentralization makes it harder to tamper with, transactions are secure, private, and efficient, and the transparent technology is attracting most of the users from banks to blockchains. Now we will look at the cons of the blockchain. So significantly technology cost associated with mining Bitcoin is so high that it is still an issue to use it. The low transactions per second and the history of use in illicit activities, though now the situation is better and is far safer than before. And the regulation of this blockchain is so tough to understand for some people that they don't participate in Bitcoin. So now we will look at a video. Next slide, please. So now we have a short quiz for you in blockchain. So the first question for you, and the answer you can put it in the chat box. So what is a blockchain? The first option is a distributed ledger on a peer-to-peer network. Second option, a type of cryptocurrency. Third option, an exchange. And fourth, a centralized ledger. So I'm getting most of the answers as A. So can we look at the answer, please? So the right option is A, as you all chose, a distributed ledger on a peer-to-peer network. And the second question for you is, where can you buy cryptocurrency? First option, a private transaction or an exchange, a Bitcoin ATM, or all of the above. You can post your answers in chat box. So most of you are giving the option D, which is all of the above. So can we have a look at the answer, please? Yes, so the right option is D, all of the above. So the next question for you is, so the third question is, what does P2P stand for? Is it password to password, peer to peer, product to product, or private key to public key? So I'm getting some answers as password to password, but most of them have given B, peer to peer. So can we have a look at the answer? Yes, most of you got it right. It's answer B, peer to peer. So the next question for you is, what do you understand by node? Is it a type of cryptocurrency, a blockchain, a computer on a blockchain network, or an exchange? So I'm getting options as B, C, but majority are saying C. So let's have a look at the answer. So the right option is C, a computer on a blockchain network. So where do you store your cryptocurrency? Is it in a bank account, a floppy disk, a wallet, or in your pocket? Okay, so I'm getting answers like C, wallet, A, bank account, C, wallet. So either it's A or C. So it's time to look at the answer. So it's wallet. So most of you got it right. So where is the least safe place to keep your cryptocurrency? Is it in your pocket or on an exchange, on a hot wallet or at your work desk? So I'm getting options either B or D, on an exchange or at your work desk. Okay, so it's either B or D. Let's see who gets it right. Can we see the answer, please? It's option B, on an exchange. So the next question for you is, what is a miner? Is it a type of blockchain or an algorithm that predicts the next part of the chain, or a person doing calculations to verify a transaction, or computers that validate and process blockchain transactions? So I'm getting responses as D. One person has given B, and the right answer is D, computers that validate and process blockchain transactions. So most of you have got it right. Good job. Now I'll ask Katyani to take over.
Thank you, Ajay, for giving me the opportunity. Now let us know about some facts about smart contract. A smart contract is a self-executing contract with the terms of the agreement between buyer and seller being directly written into lines of code. The code and the agreements contained therein exist across a distributed, decentralized blockchain network. The code controls the execution and transactions are trackable and irreversible. Smart contracts permit trusted transactions and agreement to be carried out among disparate anonymous parties without the need for a central authority, legal system, or external enforcement mechanism. What are the advantages of smart contract? Accuracy, one of the primary requirements of a smart contract is to record all terms and conditions in explicit detail. Transparency, clear communication, speed, security, efficiency, paper-free, and storage and backup. Can we move to the next slide, please? What is a smart contract? Option contracts written as code into a blockchain. Contract is a part of the public blockchain. Parties involved in the contract are anonymous. Contract executes itself when the conditions are met. Regulators use blockchain to keep an eye on contracts. Can we move to the next slide, please? How does the smart contract work? First, free programs contract. The term, rules, and conditions of the agreements are established by all counterparties and translated into code. 2, chain of events. If the events specified by the conditions occur, then the code automatically executes. Third, execution and value transfer. Once executed, the terms of the contract will automatically transfer the value to the relevant parties. Fourth, settlement. The transfer of value to counterparties will be recorded on the blockchain. Change, please. Now let us look at a video. Okay. So let us have a quiz session. So for the first question for all of you to answer is, smart contracts can be used for A, government voting systems, B, maintaining health records, C, financial service, or D, all of the above. Please mark the answers in your chat box, please, so that we can look at the... I can't see any of the answers. Oh, I can see D. Please, can we have a look at the answer, please? Can we have a look at the answers? So the right answer is D, all of the above. For next question for all of you is, who introduced smart contracts? Option A, Nick Szabo. Option B, Satoshi Nakamoto. Option C, Vitalik Buterin. Option D, Billy Marcus. Please mark out the answers. I've got answers from Akshat Srivastava. A. Tanvi Goel, A. Also D. So let's see what's the correct answer. It's option A. Next question for all of you. Which is the first smart contract platform? Option A, Bitcoin. Option C, Litecoin. Option C, Ethereum. Option D, none of the above. Please mark the answers in the chat box. A. C also. So please mark the answers. Can we have the look at the answer? Yeah, C, Ethereum. Can we have the next question, please? Okay. What are the benefits of a smart contract? Transparency, accuracy, efficiency, all of the above. Please mark the answer. So I'm getting the answers as D. All of the above. So right, and so your right answer is option D. So most of you have given the right answer to the question. Can smart contracts be changed? The next question. And the options are yes or no. Please mark the right answers. Everyone in the chat box. Okay, no. No. So most of the, everyone is, let's see what's the answer is. We'll check out. Yeah, so everyone has given the right answer now. So the right answer is option B. Next slide, please. So I would like Ashvi Jain to take over. So Ashvi, yes.
Now let's move forward to the challenges and solution of fintech. In addition to established competitors, fintech companies often face doubts from the financial regulators, like issuing banks and the federal government. In July 2018, the Trump administration issued a policy statement that allowed fintech companies to apply for special purpose national bank charters from the Federal Office of the Comptroller of the Currency. Federal preemption applies to state law regarding federally chartered banks. Data security is another issue regulators are concerned about business because of the threat of hacking as well as the need to protect sensitive consumer and corporate financial data, leading to global fintech companies are proactively turning to cloud technology to meet increasingly stringent compliance regulations. The Federal Trade Commission provides free resources for corporations of all the sizes to meet their legal obligations of protecting sensitive data. Several private initiatives suggest that multiple layers of defense can help isolate and secure financial data. Let's share about some information of challenges and adoption of blockchaining. Over to you, Ajay.
While blockchain technology would become a huge cost saver for banks in the years to come, challenges for its adoption need to be addressed before they become a fully integrated part of the financial services industry. The biggest hurdle is to make it easy for developers to build on top of blockchain technology. We are talking about a nascent technology here, and it may take over 2 to 3 years more until standardization is achieved. So the blockchain technology in its current form is very difficult to use. The user must know how public or private key works, then go through dozens of steps to actually get a transaction done in cryptocurrency. Currently, only public chains guarantee the properties that make blockchains different from standard databases, namely immutability and resistance to collusion, thanks to consensus at scale. Unfortunately, he said, public chains have severe drawbacks in terms of both privacy and scalability. The balance to achieve between scalability, privacy, and P2P settlement, which is decentralization, is still a big problem. The innovation in blockchain tech is happening fast and is outpacing regulators' ability to keep up. Regulatory hurdles will remain in enterprises and need to work within the regulatory framework, which currently lacks understanding and knowledge. There is an absence of control in decentralized projects like Bitcoin and Ethereum. So by design, they have no management structures, and this is a little outside of comfort zone for enterprises as they don't have clarity about the future track and how they can control it. Integrating with traditional or legacy banking software, it remains a challenge. Integration of different blockchain platforms, it's also a big challenge. The user interaction needs to be much better than it is currently. Higher initial cost involving software, hardware, training, and shortage of trained resources with the know-how, and the energy consumption needs to be reduced by better algorithms. Public perception must change towards cryptocurrencies for mainstream adoption. Now I would like Katyani to continue.
So let's look at the way forward. The next steps to the future, working on building POCs in Ethereum and checking integration with existing applications. Second, keep a regular check on the market events in blockchain. Sorry, the slide has changed. Please take it to the way forward slide, please. Yeah, thank you. Second, keep a regular check on the market events in blockchain. Since the tech is extremely new, the landscape is rapidly evolving, and new entrants and platforms are coming in quicker than most people can anticipate. Continually try and experiment with upcoming platforms to best understand the emerging platforms. The community is now growing at an exponential pace, and involvement in the same would be beneficial to the future. Attend seminars, summits, and conferences on blockchain around the globe. Hire a small but dedicated team of people or move interested people into R&D on blockchain to build up on future capability. There will be a severe source crunch when the technology goes mainstream. Can we move to the next slide? So here's a quiz for all of you. So first question is, who said these lines? Trust is most expensive thing. Cheap people can't afford this. Please mark your answers. Where are the options?
Also, okay, this is a famous dialogue. Can you guess who spoke this?
All right. Okay. So please guess the answer. And please write. All right. Akshat has given an answer. Harshad Mehtabul. Can we have the look at that? Okay. So Akshat and Tanvi are right. The next question is, name the thing which is the biggest, which is bigger, equal, or to the elephant, but has no weight. Can you name the thing box, please? Tanvi has written trust. Elephant's shadow or dream? Nobody has the right answer. Can we move to the next question, please? Yeah. Chloroform can take how many minutes to make a person unconscious? Can you guess the answer? Can you write the answer in the chat box? "15 minutes. Muskan, 10 minutes. 5 minutes. Can we have the look at the answer? At least 15 minutes. Okay. Can we have a look at the answers? Okay, 6 to 8 minutes. So we have come to the end of our presentation, and so if any of you have some queries, so you can feel free to ask. We'll be happy to solve your queries, and we'll try our best to solve your queries regarding the presentation. Yeah, you can ask your questions. You can ask your questions if anybody is having any questions. I'll be happy to ask.
Katya, here are some of the questions in the chat box. Please check.
குளிக்குது யாழி ஆப்போசிட்ல இருக்கா வேம்பு குளிக்கிறேன்னு சொன்னுச்சு குளிச்சிட்டு இருக்கானோ ஏனா அவன்கிட்ட கேட்கல
Please mute. So I have seen one question in the chat box, that is, if someone wants to work on blockchain projects, what are open sources available? So some of the sources available, like by IBM and by cryptocurrencies and that introduction to hyperledger, that the technologies of the blockchain. So there are some of the few sources which are available. So you can go for that. Another question you have?
Ashvi, am I audible?
Yes, you are. Please continue.
So, like, even if we humans have evolved from zero, from nothing to a lot of things, like we have evolved in terms of technology and all the rest of the things, but there are some glitches. So even after going through a lot of network tests, we still face some network issues in the presentation. So really sorry for that. And yeah, we are over. So thanks a lot for hearing to us. I would like to thank our HR Vivek Dangi sir for giving us this opportunity, and yes, the YEF team. We are really very thankful to you all. Thank you.
Thank you so much, everyone, for listening us patiently. And I hope this session has benefited to grab all the information about our topics. Thank you so much. Please fill the feedback form. You all can leave now after filling the feedback session. Thank you so much, everyone.
So I hope all of you have filled the feedback form. And if you have done, you can kindly leave. Thank you so much for joining us.